Let's devise an assumption from February 6th, 2025. DEVISE stands for divergence, exhaustion, volume, initiation, sponge, and excess. So let's go through this line by line. Divergence, I want to direct your eyes to CVD on the footprint summary here. That is the cumulative volume delta. And I like to look for divergence there. So what occurred there, the CVD made a higher high as price made a lower high. And so that occurred here. There's the higher high in CVD, negative 985 was the highest of the day, yet price itself made a lower high. Exhaustion, so aggressive buying occurs as price pierced 6105, this pink line here. You can see that in the form of these green bars. Then there's a burst of volume, which you really see here. So we're piercing it here. You're seeing the green bars pop back in here. So you have the first pierce, then you make a slightly higher high rejection with that strong selling, but that's followed by more buying. They try to sell it again, more buying, that big green bar there. Again, buyers still in control. Here's where you see the real exhaustion. Those dark green bars, that is the most aggressive buying. That's where you also see the divergence. Again, I'll draw a vertical line here. Price makes a lower high, CVD makes a higher high, and then finally you see that dark green flip to dark red. And what that is, and there's the volume there. So there's the 16.5 thousand, it peaks at 19.3 thousand, and then finally you get that strong reoffer that slams buyers on that lower volume. So that's a taper going on right there. And so that's exhaustion. Volume, that's where you see those sellers push back aggressively, confirmed by that delta gradient, confirmed by that volume taper, and then one of the most important things for my entries, at least, you see that 4-bar fractal. So bar 1, 2, 3, 4 for a sell signal, we'll call it. I'm reluctant to use that word, but for the purposes of this video, we'll call it a sell signal. For a sell signal to occur, the close of that current bar 1 must be lower than the low of the previous bar. Check. And finally, and additionally, since there's only 2 items in this list, the close on that current bar 1 is lower than the low of 3 bars back, bar 4. And you see that low of bar 4 is about 103.7550. And then here you get that 1 tick lower, and that's your confirmation there. So that's volume. So we have the divergence, we have the exhaustion, we have the volume. Next, we have initiation, this is the most simple of the criteria, which is just price rejecting the edge level, in this case 6105 by a factor of 0.25n, which is about 3 points here. I don't have the volatility from yesterday, but something like that. And it doesn't have to be precise, obviously. And so you're getting that there, obviously, as we make that lower low. So there's the initiation. The sponge. So the sponge is the trickiest portion. So if you're watching this video and you're not subscribed to my newsletter, I highly recommend that. Retailtrading.com or master.substack.com as the retailtrading.com gets built. You can check that out where you see the write-up, but I'll just go over it real quick, and I'll try to do my best to just talk it out as well. So absorption occurs when price pauses an area of high liquidity, that edge level 6105, obviously area of high liquidity, and you can see that confirmed again by that volume as that volume pours in there. So that's showing us that there's liquidity in there, there's interest, there's volume, and in this case a bearish sponge occurred because sellers reinforced the offer, showing that price was uninterested in further upside exploration. So you can see that on the DOM, but you can also see that in the aggression that we just talked about during the exhaustion phase, where you had the buyers pouring in, and then you had the sellers coming out with more, equal if not more aggression, but enough aggression to push price lower. So that's what it looks like reinforcing the offer in price candles. You'll see a little quicker on the DOM, so that's another place to see that as well. And if you're really good at reading 30-second price candles, I guess you can see it there too. It's there's many ways to skin the cat, especially when it comes to the offer getting reinforced. So if you've been trading long enough, you'll know what I mean there. Anyways, so that's telling us that there's no interest in that further upside exploration. And then the sponge was also visible as a tight cluster of flipper candles here. So you can see as we're moving from the low, we're not having too many candles at one price point. Then we get to this important level, you see that cluster, and that's another sign of the sponge. And then finally, we had really nice excess here, which is when volume tapered, as discussed a little bit earlier, and the wicks at the edge of balance. So wicks here confirm that potential excess. Balance here is the volume profile. We're pushing back into it. And then what happened? Amazon earnings come out. That's what you get.